following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. The wheels are back on. We're going to talk about trading. Hope everybody's happy about that. We're going to take a look at the S&Ps initially. Obviously, you know, this breakout on Friday, pretty tremendous. Don't have to tell you guys that. 2101, 2105, busted right through it, close above. Now we're just in the ether up here. And we talked about not shorting against these 2101, 2105s right now. Just there's too many, you know, the unemployment report came out. Obviously, that's kind of a, you know, not a very valid number when you're trying to find out how many people are unemployed, as opposed to the cooked books employment, you know, unemployment rate, whatever, you know what I'm talking about. So, but the thing is not trying to make or derive too much theoretically out of what it should be. Traders trade on those numbers, and as nonsensical as it is sometimes, that's just the way it is. And you've got a lot of things going on this morning. Japan, the party that wants to be the king of stimulus, has won, and that's been very, very good for that. It's actually caused the yen to finally start getting some legs here on the north side, the devaluation side. We're going to take a look at that in a little bit. But what do you do with the S&Ps now? Lurching north here. You know, again, you're either, in my opinion, trying to find small short-term support still. Here's our 240. I changed those grid lines on the chart here. I realized, why does it seem so noisy? Finally got rid of those on all the charts on eSignal. But right now, new profile attempting to appear on the 240s. And we're going to, you know, look across the globe in just a little bit before we make a final assessment here. Just wanted to kind of let you know what's happened and you know what the MO might be moving forward in the short term. Don't see this thing completely reversing right now, but let's take a look. And we've been looking at this, you know, looking at it from the short side and putting ourselves in the short camp and understanding that was a very terrifying situation for a while there. But here's gold. And we're going to come back to that S&P trade in just a little bit. Here's gold, just to cover some of the bases this morning. Here's the weekly, getting a little bit of a turnaround here this morning. But why is that the case? Talked about not shorting gold. Still not a fan of shorting gold. Here's the new profile that appeared this morning, and we've reached a high of 1377, rounded off. The unfair high is 1377. This is all in the scanner. We've kind of come off of there. So still looking at gold from, you know, we busted out of this 1200 pretty hard, and profiles have edged higher. You've got a number down here that it was 1336 was where we reached a low after that unemployment report. We talked about 1340 being support. In that neighborhood, we bounced pretty hard, but now we've got a new profile that's edged higher, and we're just kind of slumping off of these profile unfair highs. I'm still not a big fan of shorting this product. I'd still rather just wait for support again. That support still is at 1340 and also 1315 now. Reason being, we're still edging higher on the profiles, and I'm just not a big fan of shorting gold. I think that's, without question, trading against the trend. We may pull back here even farther, and it's nice to wait and pick battles, by the way, around these inflection points, these envelopes. And our automated systems kind of focus on that. Let's take a look at the dollar really quick. This is something on our weekly. We've talked about this 95.76. That's still the case on the long-term support here. I think we can edge higher. I like how this thing is spun around and looks like it's going to lurch forward again. On the short term, here's our 240s here. You've got short-term support now at 96.55. And that's kind of the way I'm looking at the dollar. I think we can bounce off of that area. Let's go right into the yen really quick. Well, actually, let's hit the Nikkei first. Where are we at? This is called a decent move, folks. Here's the Nikkei. You've got repricing going on, the devaluation of the yen, the rally on the chart, the devaluation of the yen is kind of an inverse situation. 1674 targets up top right now. As you can see, that support around 15,163. We hit it 160. 4 days ago, we hit 170. So nice little support area. Looks like the leg up at 16,374 is going to be in order here. And if you're trading short term on the yen, on the Nikkei, you kind of already closed above and retested. I think you're just going to move higher here. Going to the yen currency chart. If you guys have any questions, please throw them out there in the den. And if John from Philadelphia is watching right now, we had to cut the show early on Friday when I was in the greatest mood in the world. We were talking about soybeans, and he had posed some questions there, and I had to end the show early. So if you're listening, John, you can call back in anytime, obviously, and we'll continue that conversation. So the yen trade, you know, we talked about trying to use this 101.33 general area as something to lean against, and I talked about, you know, still trying to stay in that camp. Well, we've got a pretty good notion here now with the party coming to power that is a huge fan of corrective measures when it comes to pumping liquidity into the system, blah, blah, blah. Here's also a new profile that's going to appear more than likely tomorrow in the yen trade to possibly move higher. Your first stop up is going to be 105.40. And then 110.40 is my opinion. I think you've got a massive risk-reward scenario here, putting the stops now below 101.33 again. Sometimes you have to kind of take the medicine. And, you know, again, we talked about, I think Thursday, we talked about looking at your own data, charting your own data, figuring out your own risk-reward scenarios that are usually the case, trying to get them into the, you know, 1.7 or higher, and looking at your winning percentage, all things considered. That's how you analyze an automated system, and I'm a big fan of looking at my own trading that way also. British pound, hitting this one pretty quickly. Good news is here, you might have some more inflection points to lean on the long term on the daily. That's probably going to be the case by tonight. Come on, charts. But while we wait for our charts to correct here, we're going to take a break and we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Was looking at Tesla here. Elon Musk says he's going back to the drawing board and has a secret plan. That's always, well, that seemingly is settling for investors here. Trading 219 pre-market. You run a company and you kind of know what that means. That means stuff's not working. That is what it is. Let's take a look at crude really quick. And we're going to, actually, let me finish up with the British pound. Sorry about that. I was going to finish with that. So got a new profile that's appearing on the British pound down below on the daily. That's where I kind of look at, okay, there might be a little base here to lean off of. And at the same time, for kind of a contra trade north here, talked about this 128.85 general area, being able to orient stops and maybe get a retracement back up into 132. I'm still a big fan of that. Again, that's not that the pound is turned around and the pound is sound, but you know, just a little contra trade north might be a nice little risk reward there. 400 pips possibly, and orienting your stops right there. All right, staying in line with the currencies before we jump tracks to something else. The Australian dollar, we finally got that close above in the profile, 74.81. That's what I was looking for. I'm actually kind of a big fan of this currency still being the one to, you know, look at from the long side. Again, once we got that close. So right now, 75.39 is support on this to move higher. I like how this thing compressed. This is our daily. Finally got that move above and got some things we can lean on from the long side. I actually like this trade from the long side. We talked about, you know, passing on the shorts. This is our weekly and just getting back above, especially last week. We had to close above and, excuse me, the week before close above and then kind of rattle around. I really think we could actually shoot for 77.46 on the Aussie dollar. It's more of a long-term trade. It's kind of something I'm not trying to day trade. But you've got 75.39, and that coincides also with the top of your 240s here, 75.31. So something to lean on. I know we've kind of lurched forward here pretty good, but again, I think we can go much higher on the Australian dollar. All right, going back to some of the other usual suspects. Crude. This is pretty damning. 45.66 closed below last week, and now we're kind of coming back up into that area. Here's the 240s, 45.68. Again, this might be something to look at from the sell side because the weekly close wasn't really deep enough below the profile to really cause me to think that the course of action had changed. Here's the weekly chart. As you can see, it's still a little noisy right here, but again, I think looking at this from the 45.66 stops above, you could have some more downside move in crude, believe it or not. Beans. Talked about getting into this general area down below 10.16. I think we reached the low of, let me get this up here so I can see it. 10.21. Talked about leveraging last Thursday, I believe we talked about this off of 10.72.5 before that happened. And now we're right back up into it. So I think you could actually leverage some shorts again around this 10.72.5. Excuse me, let me pull this up. So you've got a big POC on a wide profile on our weekly, and you've got the top of a profile on the 240. I think we can drift a little lower back down here on November beans. That's my take on it. And we'll have to wait and see where the target's on that because we've got a new profile on the daily trying to appear there. Shanghai, let's just hit it. Just to say we hit it. No leverage there. The weekly still just kind of mired up in a range. The notes. Taking a look at the notes. It's amazing. These lower rates, no mystery to you guys, I'm sure. I rode my motorcycle for, on Saturday? Of course, to see the scenes, not to cool off. Down the eastern part of the state, got sunburned I didn't know you could get a sunburn through a mask that had a smoke shield on it. That was new to me. See? But was amazed at how some of the real estate had jumped down in the middle of nowhere where we just, refer to it as lowland mosquito hell, if you will. Little, acres of land with no, literally no water, no nothing in the middle of nowhere. It's like $50,000 on the water though, but the water's going higher, and it's amazing how some of these rates have just, by default jumped so much of this real estate in eastern North Carolina, and some of the, just I would call them hunting shacks in the old days, on the water, tons of mosquitoes, blah blah blah, no pier. 250 grand, amazing. Incredible. So anyway, going back to the 10-year here. Still a big fan of buy the support on this. Now new daily support, new profile today, 132.25. That's your support on it. Don't know if it's time to start selling this, but at some point it is going to come apart at the seams, but that's kind of a Jimmy Rogers attitude. Very hard to time those type of trades when impending doom is coming. But right now it is what it is, and the wrench has got to be turned the same way, and now you've got to wait, and the waiting area, believe it or not, is 132.25. Not a lot of things make sense these days. Silver, man, insane. This is the good news for silver. We talked about this on Friday. Profile appearing below. We talked about 1904 being that relative 1340 type situation on gold. We've bounced higher, obviously. And now You got some inflection points on our kind of regulator downstream here. 2025 on silver support. And if that breaks, then you've got 1960, and then you've got 1904. Not a big fan of shorting silver or gold. We talked about that. Kind of blocking out that side of the marketplace. XLF. What was that? Blind pig finds an acorn. Here we go. 2313 is a decent selling point in the XLF into 2358. We can be right back and talk about this and a couple more ETFs and instruments within those ETFs.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Honeycomb. Well, it's a darn good life, and it's kind of funny how the Lord made the bee, and the bee made the honey, and the honeybee looking for a home, and they called it a honeycomb, and they roamed the world.
I didn't know Jimmy Rogers had doubled as a country western star. Good tune now. Let's take a look at some retail stocks here. I guess Black Friday's coming early. Let's take a look at Target. All right, so, man, these guys have had it rough, huh? So, you know, when you go to the scanner, I'm going to go to the scanner. Here it is. And let's see, I'm going to look at downtrend resistance. And even before looking at the scanner, we're going to surf through some of the retail stocks without question. But if I go to downtrend resistance, what does this actually mean? This is a cool sort that I like to use in addition to downtrend resistance and uptrend support. So when the market is just blowing a gasket on the upside, a lot of times, as you guys know, just S&P 500 arbitrage, buy the basket, sell the S&Ps, buy the basket of the S&P. There's a lot of stocks that have some kind of beta relevance when it comes to being in the S&P 500. And a lot of times, rising tides lift all boats, that kind of concept. And when a market's marching north like that, a lot of times I'll look at downtrend resistance, this custom sort. And basically, we spent some time on this one. It's basically trying to find stocks that are in a certain phase where they're in a downtrend and they're kind of just poking their head up into areas where you can short them again, for lack of a better way of putting it. So looking at Target, TGT, and looking at it on the E-signal chart and just saying, wow, this should be a downtrend resistance, I could find these opportunities by going to this. So looking at Target, and you'll see top 11 arrow down. So that means that we're kind of up in the maximum area of resistance. We talked about the market not wanting to be short the market right now, therefore just kind of letting it do its thing. Now that it's done its thing, it's lifted some stocks up that were in going to heck in a handbasket here, Target being one of them. And going to our weekly chart, and I could have seen this in the scanner also, we have kind of raised our head up to be hit again. And that area 7150 is the weekly unfair high with Target. And this morning, we haven't started printing yet. Even though we have kind of broken strike, looking at look, the daily's doing what it's doing, and we've kind of followed some market relevance north here. You've gotten back into the top of the profile, and this, in my opinion, is a trading opportunity. If you get any type of market pullback, this thing should theoretically be able to come back a little bit. So the good news is also you've got a chance to play defense here, and that's the most important feature. Okay. How you like that? All right, so here we go. Let's go back to the scanner. Let's look at something else that looks kind of ripe here. Let's look at Macy's for a second, another retailer. Isn't it interesting how, let me go in here and let's see. Target, XOY, XOY, XOY. A couple of XOY stocks on here. Fossil, FOXA, First Century Fox Class A. GameStop, GME, Macy's. Let's take a look at Macy's. So, no mystery to anybody here. Brick and mortar retail. So here's the top of the profile, 3468 on the weekly, and then you've got the 3465 here on the daily. So if I go to Macy's, it's not yet eclipsing into that noise area, the top of the profile there, but you can get the picture by looking at it. Here's the numbers really. 3478, 3465. Let me see something here. Yeah, 3478, excuse me. So, and let me see if we're printing this morning on Macy's. Got a little bit higher print on Target I'm looking at. This a real print? Not yet. But you've got a chance to look at these playing defense against 3478, 3465. We've kind of lifted up into those areas. It's obviously been a relatively weak stock relative to what the market's done recently, but kind of has become dragged up into those unfair highs. TJX, let me look at that one. All right, so this is a little bit different situation. Let me look at TJX in the scanner here. Sorry, guys. I want to see if we can pull this up. TJX. Another stock in the XLY. David White's pointing it out. Another stock in the XLY kind of, this is a relatively, not a relatively weak stock. It's not really been exactly in a downtrend. And as you can see, we've kind of used long-term profiles to kind of, be able to trade this up if that was going to be your MO with these retailers. This is obviously a strong of that sector. It should be showing green already on both the weekly and the daily. You got really decent support at 77.96, 78.30 down into that area. So this is one in the retail in the XLY that is to be left alone on the short side. So a lot of times you want to be looking at buying the strong and selling the weak. This is obviously not one of those. And David, thank you for pointing that out right then. Going back into this sort again, downtrend resistance. Let's take a look at another one here, GameStop, GME. So this is kind of cool because you've got a profile on the weekly appearing above price action last week. That's generally bearish. And you've also kind of rallied back up into this 27.41. You want to take a look and see how these things open, of course. Let's look at GME. Ouch. Okay, is this today's price? Gapping up a little bit here. So some of these are eclipsing some of these highs, but you're up around 28, which is where we are pre-market on the weekly. So I'm looking at this still as a situation that possibly could be shorted. Let's take a look at a couple others here. GPS. This is where I hang out on the weekends. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Taking a look at GPS again, where I hang out on the weekend is, this is one that kind of broken stride here. This is our weekly. This is one I wouldn't be looking at specifically to short out of that sector. And again, this is one you just leave alone. If you're looking to, to sell weak stocks, especially in that sector, this ain't one of them. Let's take a look at a couple other stocks in that particular sector. I had them typed out here. Where'd they go? Here we go. Well, we got to pull up Big Mama here, Amazon. All right. So we talked about staying away from this thing on the short side. Thank goodness. 731.50. Stocks that are just screaming north and continue to fight every single bit of downward pressure on the S&Ps. You look at these types of scenarios, the relatively strong stocks relative to the market, and you try to find areas to buy these things. And here's the low at 682. The bottom was 679, rounded up or rounded off. Excuse me, rounded off, rounded on. So you look to buy these things on support and buy breakouts, and you don't look to short these types of stocks. And this is a good example of stating that case. So 731.50 is now going to be support on Amazon. You've broken out. The market's broken out. It's broken out. This thing's not too high. Here's the daily. Nothing hindering this new move north in the Standard Oil of today's economic climate. I wonder if they will look at this ever as a antitrust situation. Maybe David White can give us some light on that. I know he's a big fan of keeping big companies in force until they drive everybody else out of business. I'm just kidding. Here we go. Let's take a look at a couple other ones. Let's take a look at Banana Republic, SHLD. On Amazon. I was just kidding, David. Here we go. Excuse me. I'm sorry, we got the wrong stock there. Sears. I got Banana Republic is. Let me pull up Banana Republic here really quick. I do too. I'd love to hear your thoughts on it, David, if you could call in sometime for once. I'm just joking. But have I got the right stock up? EXPR. I'm sorry. I've got Express up. Why do I not have Banana Republic? Let me go to the scanner really quick, guys. Sorry about that. me see if we have this in here. Nope, we don't. All right, forget Banana Republic. I was mistaken. Let's take a look. Express, EXPR. This is a situation. Wow, how ugly can this get? Market didn't help this thing. I'm not looking at this as support. Bottom of the profile in the weekly, 1373. Let's see if we're printing this morning at all. No, not yet. So, you know, what do you do with this? I think you leave this alone. You trade breakdowns below 1373. Let's go back to Shears. All right, so not a pretty picture. You guys know that. It's not on sale. 1574, you hope this thing rallies up there so you can just hit it hard. This is kind of a wait and see on Sears. And let's pull up the let's take a look at Walmart. All right, so again, and let me go back to the scanner here really quick. So again, just looking at the cell structure of this is something, you know, not very attractive looking at from the short side. I'll say that you could block out the short side. So you got the arrow up in the balanced area, even the 60-minute and the weeklies, dailies across the board, relatively green. Looks like this morning we're printing about 73.86. So you got 72.02 unfair highs on the daily and 71.61. So this is massive support on this stock right now. And we've already kind of spun around there and moved higher with the market. Been a real good outperformer. And the thing I want to point out here is when the worm turned on this stock, and we were very bearish on this stock for a long time, using that same principle, relatively weak stocks, trying to find areas to sell it, sell it, sell it. When this happens, folks, when we start breaking stride on our long-term profiles, our weekly, then you have to start looking at this. What's the market doing? And then what's Walmart doing in the meantime? So we break above, we go back and retest. Then we're kind of, you know, we've broken stride. We've broken that long-term trend down. Now it's okay to get back in the water on the long side. It's been, you know, at times a little bit of a test there on the weekly. Time to sit on the sidelines and then getting back, especially, wow, above that area on the 69.32. And then we still have to look at those long-term inflection points to buy support. So that's still the case for Walmart. It's not a stock I'd be looking at to short. Okay, we're going to look at IBM again, the bane of my existence. Talked about looking at this one, not from the short side lately also. Kind of crowding this area before we had the disturbance of Brexit and then rallying right back up pretty quick. So last week we actually did close above 154.09. We're trading 154.65 right now. So you're looking at that as support on the IBM right now. Unfair highs around 154.09. We got to take a look at Apple. Okay, so this is one you've been following this show. You know what my feelings of this one are. 91.76, we talked about a little bit of a trading opportunity there. What do you do with this now? We're trading, it looks like printing 97.18 this morning. So we talked about hoping that we can get up to 98.23 to whack this again. And that coincides with that weekly unfair high. And we're going to go into the scanner, and I'm going to pull this up really quick. We're going to look at Apple. There it is. Here's those two major resistance areas, 98.23, 98.64. You hope the market can drag this up a little bit farther. Then you've got a trading opportunity on the short side, just like you had at 91.76 down below. Right now, it's kind of a wait and see. Guys, we're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just to reiterate on the S&Ps, maybe I didn't cover this deep enough here. Cell structure right there on the top. When you look at the dashboard, it's defaulted to the S&Ps and the internals. We spent a lot of time on this, guys. You should really check it out. These are the S&P futures. And I promised I was going to get back to the S&Ps, and we're finally doing it. My short-term memory is gone. So the cell structure you'll see is green across the board. That means we're above profiles on every time frame. And when you look at trying to find a reversal in an index, you try to find anomalies. This is a non-weighted type set of data here when you're looking at this above profiles here on the daily, above on the weekly. So you don't have any divergent situations here. A lot of times, and maybe once or twice a year, sometimes you get the index just kind of moving one way and the internals are like, I don't feel like going that way. Right now you have everything kind of in concert with each other, and we're sitting near all-time highs. Things on their highs go higher. Talked about not shorting this thing, and we may get a pullback, but on our long term, now you got to look at 2101, 2105 as support on this thing. Here's our daily. It's too risky to try to, be the guy who gets the high print on the short side here in my opinion. You know, you got low rates. You've had the market shrug off the Brexit situation, which is completely amazing. And there's a lot of people out there that may have been trying to short this market or stay short based on that. Now, pretty much going through the highs, if that's going to be the case today, which it looks like it is, you might have some more people covering. So being on the short side right now, as we've talked about in the last week or so, after we had kind of ignored this Brexit situation, is the riskier trade. So right now it's still block out the short side based on the internal calculations relative to profiles and just sheerly looking at the S&P balanced areas. We're going to take a look at the euro. Going back to this, you know, what's been the easier trade to deal with the S&Ps if you were trying to go short is just, you know, catch the bid on the 10-year. We've talked about that a lot. Here's the situation on the euro. Still kind of my favorite situation. I think we can ultimately go down here and, you know, retest these 109 general areas. I'm still a big fan of that. Trying to, again, I personally have a short trade on with the in the money calls, just kind of letting it do its thing, and hopefully it'll deteriorate over time. I think the yen's got a lot more upside to it. Seems like it should have moved higher based on that information today, but I still think it's got a lot more upside to it. Okay, so crude's getting back up into that area that we talked about, that 45.66. We're kind of trading there right now, 45.58. We've reached a high of 45.63 already. So the market getting a little bit happy here could drag crude higher, but I think you've got some resistance to overcome here around 45.68 down to 45.66. I was going to hit the 30-year for you guys, but we don't have the time. I hear the music. Guys, stay tuned for Larry and all the rest of the hosts on TFNN today. Have a good week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.